How are you? Welcome back to Real Macroeconomics and Investing. Welcome to TradingView, YouTube, Twitter, and my subscribers. How you guys doing? Let's start with this video a little bit sooner than previously, right? It's not 3 weeks. Why? Because things are starting to change, and we're going to talk about them here. We're going to start with cryptos. Cryptos have kind of been leading the way to the downside. So when you start seeing patterns that we talked about last week starting to break down, then we need to do a video and kind of see what's going on. Well, first of all, let's talk about bare knuckle charting, which is the way I chart. This was the one, right? This is the compass. This is the thrust down move. This whole thing here, 1, 2, 3 up, right? Result to the downside. So this is a 2, and then we ended up with a 3. Now the 3 came down to that key area, which is the previous low, which is all the way back here. Kind of draw it out for you here, right? So we are breaking not only this structure here, but we're also breaking the previous low here. And that's problematic. And I'll tell you why that's problematic. Because you build a consolidation down here, which is typically very bearish, right? It coils up, coils up, coils up, and then just boom, starts taking out everything. Now, contrary to popular belief, head and shoulder patterns are usually continuation patterns to the top, to higher, unless they are tops. Head and shoulders at tops are indeed reversal patterns. So, this is not looking good. Not only for cryptos, but for the rest of the market because it's a risk off. Now, we can get into the macroeconomic fundamental stuff of things, and I can explain it to you, but there's not enough time for me to do that here. It was not unforeseeable. Let's just say it that way. I've been warning about the market tops and posting bearish charts left, right, and center for a very long time. So it's not like a one-shot deal, like, hey, I got something right, and by guessing, and hey, kudos to me, and pay attention here. No, it's important that I establish credibility, especially with new guys. That you go back and you just look at this is my public diary, as I like to call it. You go back and you see most of my calls are bearish, and I'm urging caution, caution, caution. Now, I would advise to go back and look at the first video where I started publicly saying it, even though I was doing it in the background, publicly saying that, hey, things are not looking good, caution. And this is one of these charts where I actually posted, this is back in, where is it, January 8th, and I said, look, we're at a key area, things are not looking good. And I talk about it in the video. Uh, the, it's kind of the same thing in the sense that, look, you are at a key area here and here. And if this breaks, well, guess what? Things are going to get very ugly very quickly. And that's exactly what's happened since. Right? You can look at it here. Right. Now I try to play in the video. I try to play some of the video clips. Unfortunately, didn't capture it. Uh, But again, if you go look at this video, it's going to tell you not only about stocks, but it's also going to talk about cryptos. All right. And again, it's important for me that I establish credibility with you, especially if you're new. Um, so yeah, go back and look at them. um, and it's funny because I posted on Twitter. I'm like, you know, some of the calls that I made had like 3 likes, 0 likes, 5 likes, 8 likes. It's just funny because nobody saw it coming. Like it didn't register, and that's when you should be shorting. And I even talk about that in videos. Now, when things started to get a little bit more uh, convincingly ugly, let's say it that way, back in January 2021. I said, don't try to pick bottoms. And you should, again, watch this video. Don't try to pick bottoms. I think now you understand why I said, don't try to pick bottoms, right? This is what it looked like at the time. Um, The next one, special update for cryptos. Again, this video is kind of a special update for cryptos, but the original one was back on January 22nd, when we started breaking this trend line. And now you've all seen where cryptos have gone, right? Don't try to pick bottoms. Same thing here with the, love boring. Um, shorting is not the opposite of buying, and that's true. Well, what do I mean by love boring? Well, you want to love this part about investing. It's boring, right? It's not exciting. It's just going up and it's boring. Once you start getting all excited, that's when you tend to lose money because you're thinking you hear this heroic little spiels like buy when there's blood in the street, even if it's yours, and blah blah blah, and you're like, yeah, I'm a tough guy, and then you buy, and then it just keeps on dipping, and then you blow yourself out. Okay. This video here, I talk about how you shouldn't buy the dip, don't pick bottoms, blah blah blah, and sure enough, it did kind of look like a bottom here, and everybody came out on Twitter and they're like, oh ha ha, see, we picked the bottom, blah blah blah, and I said, look, the crowd gets what they want, but the next video is going to be like the crowd got what they want, but they didn't like it, and that's exactly what happens in bear markets. And that video is, where is it at? Somewhere here. Anyway, it doesn't matter. A bit of macroeconomics here. I talk about, um, I forgot, where's that other video? That annoys me because I did make a, anyway, it doesn't matter. Uh, it's different this time, right? This chart I've shown several times. It's, the government is not going to support financial assets anymore. It is different this time, and it remains different this time. Over here, the government kept bailing out asset prices. Here, that's not the case now. We have inflation. So, another good call. But, how many likes did I get for that one? Oh, I got 36. That's good. That's good. That means people got it. That's good. A few answers, a few Q&A over here, questions and answers. My target is, I make fun of the people that always have targets. Well, my target is. Why do they say that? Because it makes them seem like very knowledgeable. They're very methodical in what they do, and they're so precise that they can tell you what a target is. The reality of the situation is nobody can tell you what a target is. That's just marketing. Okay, nobody knows when it's going to bottom out. Putin dies tomorrow. What do you think is going to happen? Right? War is over. Inflation pressures are relieved. Grain starts, flowing. Okay. Oil starts flowing. Okay. What do you think is going to happen? Right? Can you forecast? Can you sit here and have a investment thesis that Putin is going to die tomorrow? I don't think so. So don't fall for these people with targets. The fog of war. This is another little video that you should watch. Thank you. Um, where's that other one? Extract information from the data. This is typically what I do. My approach to everything is dynamic analysis. Okay, I don't know what the data is going to look like. People accuse me that I make up my own economics. It's like, what are you talking about? I can barely add 2 plus 2. But they think they're giving me a dig when they say that. Well, you're not an economist. Well, yeah, okay. I do better than economists in terms of forecasting markets and uh, economic data. So I fly airplanes for a living. Okay, that's fair enough, but that doesn't mean that my track record doesn't speak for itself. So again, dynamic analysis. I extract information from the data. I don't apply vague hunches and feelings to the data. And that's where you need to be. You need to be objective. You need to look at, and first of all, you need to understand all the macroeconomic data. You need to understand how charting works. Um, and then you need to extract the information from the data. Okay. So this is another video you should watch. Okay. Um, and then, nothing has changed. And it's true, nothing did change. but we're still in a bear market. Keep it simple. In the end of the day, you want to keep it simple. You start, the more information that you try to analyze, the more you're going to get confused, and the less you'll see what reality is. So you always want to keep it simple, always. Okay. So yeah, it's not like I wasn't warning about cryptos when Ethereum was all the way back here. Right. This is where I took my profits. I said I'm taking my profits and I'm running, and look what's happened since. Okay. Big drop in cryptos. And the way you should really look at it is like this. Okay, because on the way up, log is fine. On the way down, you don't want to have log because you're always no matter what the price of a stock is, you're always 100% from zero. Okay, you can't get you can't get 200% gains. I mean, I'm sorry, you can get 200% gains, but you can't get 200% drops. You're always 100% from zero, and that's why you should kind of look at them that way. Now, when you look at Ethereum, Ethereum has led the way down. And this was a fadeaway. And we talked about that in the previous video. And that fadeaway broke the previous low. And again, you have a head and shoulders that is breaking. So things are not looking good at all. Bitcoin, kind of the same thing. Not as bad as Ethereum, but it is on the verge of breaking this previous low, which will resolve to further downside. Now, here's the deal, right? Here's the deal, as Biden says, that if we end up somewhere, let's say here, and then it starts to bounce, people are going to be like, oh, this is the bottom, let me go out and buy. No, because the structure is still, there's a channel to the downside, and so long as price stays in this channel, you just keep going lower. There may be a few expansions of the structure to the top or the bottom where it just slightly break and then come back down and then do something like that. But ultimately, we're in a well-established downtrend channel, and that's bad. Okay, um, for us to even think about getting bullish, right, we would have to firmly break out of here, and that's not going to happen anytime soon. So you can kind of put that on the back burner, put that almost last on your list that this is going to happen anytime soon. So again, it brings us back to that, hey, stop trying to pick bottoms. Don't try to get bullish. Don't go against the trend, basically. Okay. Um, let's talk a little bit about this chart. A lot of people are talking about, oh, we're quantitative tightening. We're doing this. We're, doing. We're nowhere near tightening. It's not even funny. It's just comical when I see that. This is tightening. This is what the Fed's fund rate, inflation adjusted, is doing, meaning that the Fed's fund rate is higher than inflation. Here, here, this is loose money, easy money. We are so far away from even tightening. It's not even funny, right? We're all the way down here. So just to break even, we would really have to, you know, substantially rise, or inflation will have to substantially fall in order for us to be somewhere break even, let alone tightening. So it's comical. It's comical that people say that. It's whatever. Let them say whatever they want to say. But I do want you to be aware that if the Fed does start to tighten, let's say 1 basis point, as some people are now calling for, which is a bit late, but anyway, all you will see is a move like this. That's it, right? Just to kind of give you a visual on how meaningless almost it is to raise interest rates 1%, as per this chart. I mean, of course, there's a lot of meaning, beyond that, but okay. And then let's say another 1%. Well, you got this. Okay. So what has to happen? Well, what would have to happen is that interest rates rise quickly enough that it stalls the economy uh, into a recession, and then inflation starts to drop, interest rates continue to rise, and we meet somewhere in the middle here. But again, do not expect that this is quote unquote tightening. We're nowhere near tightening. I don't think we're going to get to anywhere near tightening anytime soon. All right. Uh, so, you know, even with a 1 basis point rise, we're still in loose money territory. So keep that in mind. Now, as I showed you in the previous videos, that you want to pay attention to a couple basic things. That this is consolidation, drop, consolidation, drop, consolidation, and guess what? Another drop. And here's the consolidation, another drop. Right? We have lower highs, and look how far this high from this high is, and then this high to this high. It's accelerating. This is what I call elliptic formation, where what's happening is that you are accelerating to the downside, okay, and then um, you know you're gonna get some big drop, and then there's gonna be some people out there that think they're the first ones that just came up with this pattern that they're spotting, wink, wink, right? And they say, oh look, every time it makes a new low, I'm gonna go out and buy because every single time it popped, it popped. So that's what I'm going to do next time. Yeah, well, what's going to happen is with that, newfound knowledge of patterns, what's going to end up happening is it'll just keep dipping. And especially if you're leveraged and you double, keep doubling down on that, it's going to bounce, it's going to bounce, it's going to bounce. What you're going to end up doing is blowing out your account. Don't think you're the only one that can see this. Okay, you're not. And again, just be prepared for something like this. And you're like, oh look, it's a new low. Yeah, and it keeps going. So please be careful. Again, I'm going to remind everybody: shorting is not the opposite of buying. Okay, and be really really cautious. This is not the time to be making money. The time to be making money is when things are boring. Okay, not these things. These things kill. They kill accounts. Uh, Lastly, don't play around with these, third grade cryptos. Okay. Um, this is the last thing that you need to be doing is to start getting fancy, start saying, oh, when all the other ones blow up and these remain, I'm going to go out and buy them. Don't start doing crazy stuff. Keep it simple, always simple. Don't start to become a degenerate gambler and you just you're the guy with the comb over and a roulette table and you're just putting chips all over the place and thinking that you're going to become rich. And no, that's not the way it works, unfortunately. I know of nobody that got to the top 100 of the most richest people in the world because they were placing you know chips all over the roulette table. It's not the way it works, so please don't waste your time with that. Lastly, I want to again talk about this chart. If you look at the great financial crisis, what happened is the private debt got excessively high before public debt stepped in to kind of mitigate that. But what happened as a result is that public debt just went parabolic. And then that's not sustainable. You cannot print, borrow, and import to prosperity. So that now has to correct, and it's going to be painful. Okay, there's going to be a lot of damage. It's going to be done short term, but it has to do what it has to do. Unfortunately, so the more you print, the more you have to print in order to support asset prices. And we're at the point where you can't just again keep printing forever. And if you're trying to pick bottoms and do whatever, the fundamentals are against you. That this is going to work anytime soon. All right. It surpassed. I mean, public debt has surpassed personal income, household debt, personal income. You know, it's it's bad. It's surpassed GDP. It's ugly. So please don't, you know, be really cautious. I think it's better that just raise cash, observe, learn what you can out of this bear market, and be ready for the next one. Thank you very much. If things do change, I will come back and make a video tomorrow if I have to, or 3 days, or whatever needs to be done. All right. You take care of yourselves. Have a great weekend, great week, and I'll talk to you soon. Be really careful. I'm warning you.